In this video, I'm about to share 4 golden rules that can make or break your scalping game. Whether you're a seasoned trader or you're simply just starting out, these rules are non-negotiable. But before we dive into the video, make sure to hit that subscribe button and ring the notification bell so you don't miss any of our future content. Let's waste no time. Let's jump right into it. The very first rule is trend recognition. And trend recognition, if you're wondering, is your ability to determine the overall trend by analyzing price action across multiple time frames. Ladies and gentlemen, there is a misconception when it comes to scalping that you have to spend a lot of your time on the lower time frame, or you're simply only looking at one time frame, the 5-minute or the 1-minute. And the reality is, as a scalper, you still want to be paying attention to multiple different time frames because you want to gain an understanding of what is happening. You want to gain a big picture understanding. If you are looking at the market, let's say you come in and you see price making high highs and high lows in an uptrend, you want to be going over to the lower time frame, like the 5-minute. If you see price trading higher on the 1 hour, the daily, on the 5-minute, the 1-minute, you want to do the same. You want to still participate in that overall direction. You don't want to be scalping, even though you're taking advantage of short-term movement. You don't want to be scalping in the opposite direction of the trend. It decreases your probability. And you want to do the same thing in a bearish market if price is making lower lows and lower highs. Scalping in the direction of the trend increases your overall winning profitability because the institutions are working off of the higher time frame. So it is really important that as a retail trader, you put yourself in a position where you're trading with the big boys. Let's go over to the chart here so I can show you what I mean. So we're taking a look at Euro USD, for example. Right now, what we can see as we take a look at the 1 hour time frame is that the market is moving lower. Price is currently bearish. So as you're coming into this market right now, you know that you're coming into a seller's market. Price is making lower lows and lower highs, lower lows and lower highs. The lows are being targeted. When you are scalping, you definitely want to keep this in mind as you go over to the lower time frame, whether it's the 5-minute time frame or even the 1-minute time frame. Because if you are buying, yes, you might have a good opportunity to buy. Like right here, you got this decent pullback, but you never know. It's a little bit uncertain whether price is going to go in your favor or even for how long the market's going to go in your favor. So for me, when I'm scalping, it is important that I stick with the higher time frame because it increases the overall win rate. It makes my scalping strategy more of a high probability. So right now we're taking a look at it. We've already identified on the 1 hour time frame that price is moving lower. So as you're coming into the 5-minute time frame, what you want to do is you want to put yourself in a position where you can be a seller. And let's say we get involved and we sell in hopes that price will continue moving lower. So let's see what happens here. Boom. Right? So what you've just done is you've scalped and you've put yourself in a position where price moved in your favor with zero hesitation. So when you're coming into the market, your ability to identify the trend is pretty significant because once you can identify the higher time frame trends, it puts you in a position where you can trade with that on the lower time frame. The second rule is pattern recognition. Trading is all about your ability to recognize patterns. And this is something that I always talk about. I tell my students, I tell them, like, listen, you have to be collecting samples of your trading strategy. Recognizing price patterns such as trends, continuation, consolidation, channels, and breakouts, or even change in market structure can give you an advantage, especially when you can recognize these patterns in real time. Pattern recognition provides visual cues that help scalpers make quick assessment of the market conditions. Scalping is very high paced. Some days you're going to come into the market and you're not going to know what's going on. But in order for you to feel comfortable putting your capital at risk, there needs to be a little bit of familiarity, a little bit of understanding, right? Okay, maybe you're watching price change, from a buyer's market to a seller's market with a break of market structure. Or maybe you're seeing price is about to break out from a consolidation and you want to be a breakout trader. All of these are going to allow you to be able to put your capital at risk. And most importantly, it also provides a psychological comfort when you have a well-defined set of recognizable price pattern. This is so important because this is one of the things that really helped me with my trading strategy. I swing trade and I scalp. And a lot of the time, the same pattern I use when I swing trade is also the same pattern I use when I scalp. It just so happened that I have built that recognition with my trading patterns, so I know that even when I see them on the lower time frame, they still work and I feel comfortable taking it. It's like walking into a party and you don't know anybody, so you're a little bit like closed off. And then all of a sudden someone walks into the room and you're like, wow, like you start talking, you feel more comfortable, you open up. That's essentially what it is. Your ability to recognize patterns is so important. So my advice when it comes to this is collecting samples of your trading strategy. Whatever you're trading, if you're trading order blocks, you need to collect samples of this. If you are a liquidity trader, if you are trading off of market structure, whatever your approach is, if you are a breakout trader, you're trading consolidations, collect samples. And I always say collect as many as possible. And sometimes I give my students 100 samples. If you have a particular strategy, you need to collect as much samples so your brain sees it enough time that it can see it play out in real time and take full advantage of it. The third rule is to trade from an area of interest. An area of interest is an area where you can see more buyers and sellers come into the market. Trading from an area of interest is what allows you to maintain a level of patience. Even as a scalper, you might say, okay, you're just buying and selling, you're just buying and selling. The profitable scalpers will tell you that you still have to wait for the right opportunity. You still have to wait for price to get to an area of interest. And an area of interest can be a support and resistance level. It can be a supply and demand zone. It can be a liquidity zone or a fair value gap, which is a smart money concept that a lot of traders are using right now. An area of interest can be a wide variety of things, but as long as it is something that you understand, it could be an order block, for example, where you want to take advantage of price, or you can anticipate that more buyers are going to be coming into the market if you want to buy, or more sellers are going to be coming into the market where if you want to sell. For me, an area of interest, trading from an area of interest just allows you to get that extra confluence in your overall trading approach, because it tells you, okay, you know what, this is where price is likely going to be reacting from this level, so I should get ready to execute my trade. The fourth rule is to wait for clear confirmation, which is seeking confirmation from multiple price action signals before executing a trade. Number 4 goes hand to hand with number 3, which is trading from an area of interest. One of the common mistakes a lot of traders make is when price hits an area of interest, they instantly click execute, buy. And this is something I did for a while. When I was trading support and resistance or supply and demand levels, the minute price hits those levels, I am just executing the trade. But I came to realize in order for my setups to be more of a high probability setups, I need to wait for clear confirmations. And clear confirmation can be a candlestick pattern, maybe an exhaustion that you look for, or a reversal candlestick pattern, a market structure break, which is one of my favorites. Support and resistance is there as well, but it should be paired with something else like candlestick patterns or momentum. Right? Momentum is the speed at which price is moving in a particular direction, and momentum essentially gives me a lot of clues, because when price hits area of interest and I all of a sudden see the change in the candlestick pattern, the change in momentum, price is moving in the other direction, it makes me realize, okay, you know what, this level is holding. So that's kind of like a confirmation for me that I use, and what you as a trader can also use as well. So we've gone over the 4 rules. Now let's go over to the charts and put these rules into practice. So as we're taking a look at the market, we are currently on Euro USD 1 hour time frame. Like I said before, when you're scalping, right, the very first rule is your ability to identify the trend, being able to recognize the trend. And what we see here is that price is making high highs and high lows. The market overall is moving to the upside. So automatically, you know that you want to be a buyer, even as you scale to the lower time frame. You want to keep in mind the little detail as well. And what we see here is price trading lower. We had a little bit of selling pressure, but now we're getting a little bit of that buying pressure come back into the market. So as we scale down to the lower time frame, what we're paying attention to is now the structure, right? We're seeing that price is moving higher on the higher time frame and also on the lower time frame. The market is making higher highs and higher lows, higher highs and higher lows. And what this tells me is that I want to be a buyer in the market. And the next rule that we talked about was pattern recognition. We see that from a market structure standpoint, price is making higher highs and higher lows, which in itself is a pattern, and it signifies that price is moving higher. So we have an additional confluence. And the third rule is to trade from an area of interest, and currently right now we have that area, as we see that the market had a difficult time breaking above this level and finally did so, right there. So this is a pretty significant area of interest, from a support level, right? Because this is past resistance that can potentially act as future support. It acted as future support right here, and now we're essentially just simply waiting to see what price is going to do. Is the market going to trade back into this level and bounce? This is where you have to wait if price is going to trade into an area of interest before you can execute your trade. So let's see. So we're watching the market. Okay, beautiful. So now we're seeing that price trade down into this level. Price is essentially tapped into this level. So we see another dip back into this level. What you want to wait for now is clear confirmation, which is the fourth rule that we talked about. So as you're about to scalp the market, we see that price is trading into an area of interest, but rather than just taking a trade and buying right now, it is always in your best interest to wait for clear confirmation. And for me, clear confirmation could be a change in the selling pressure to buying pressure. So let's see that, or a candlestick formation as well. So right now we're seeing bullish candlestick and price is bouncing off of this level. Okay, wow. So price is essentially boom. So we're seeing the momentum shift from sellers to buyers. So to me, this is enough confirmation that this level is going to hold, and it is worth me putting my capital at risk. So we're going to take the long trade right here, and we're going to set our stop loss just below this low, which is 11 pips. The next thing we want to do is we want to set realistic targets for ourselves, and right there. So we have this high. We know that if buyers are coming into the market, they are targeting the highs. If you don't know this, you should watch, some of my previous videos where I have gone into depth about the concept of liquidity. So right here, we know that if the market is going to move higher, this is going to be a pretty significant level. This would be a 1-to-1 from a risk to reward standpoint. So if we take profit here, that could be, a 1-to-1. But ultimately, I like to at least, even when I am scalping, put myself in a position where I can potentially capture much more than that. So right now we're risking 11 pips to make 33 pips. If we take something off the table, we can close out for a position here. Right there, that's what we have. We have our reasonable target right there. And let's see how price essentially plays out. Boom. Wow. So within a couple of minutes, our take profit was hit. So guys, when you are scalping, these are rules that are going to help you. Like I said in the beginning, they can make or break your scalping strategy, whether you're a seasoned trader or a beginner trader. And if you want to improve your scalping game and you're not using one of these rules, definitely start today. And like I always say, guys, don't take my word for this. Make sure you take it to the charts. Make sure you practice. Make sure you see what works best for you, right? Collect samples, back test, and overall, that's how you improve. And that's the video, guys. Thanks for watching. I hope you found this video insightful. On your way out, don't forget to hit that like and subscribe button. And feel free to leave a comment down below. Let me know what your scalping rules are, or some of the things that you apply to your scalping rules that is working, or some of the things that is not working, right? Or that you would like to improve. Here, this is a safe place for us to get better as traders, for us to keep improving so we can keep making money. This is a craft, guys, and in order for you to become good at this craft, you have to work on it. And I am cheering for you every step of the way. Thanks for watching. Till next time.